Good morning. We are joined now by Davide Bosio, who is Western Australia Estate Manager at Shaw and Partners. David, a very good morning to you.
Good morning, Joel. How are you?
I'm good, thank you. Thank you for asking. Listen, we are just a day away from the Australian federal election, but plenty going on in the gold markets. Let's talk about that first. Certainly a very interesting movement by price this week, moving above 1830 US dollars an ounce. How significant a resistance level was that for you, and what's your general reaction to what spot's been doing this week?
Yeah, spot's been crazy as always. It's whenever you put out your best guess of where it's going to go, you immediately realise that you're destined for failure. But we've seen gold price sold off alongside many of the markets over the last week, and in this sort of move to liquidity, and fortunately we've held up with a little bit of support around that 1800 level where gold did temporarily dip below, but now it's rallied up again. And I think last night we're up about 1.5%, and gold was trading just through around 1830, 1840, which is good. So it feels like it's found a little bit of support again.
Yeah, what do you make of the market reaction to that US retail data and how it fed into spot prices?
Yeah, so I think there's so many different factors at play at the moment. We've seen that massive sell-off in consumer discretionary. We've seen the retailers just getting sold off so strongly, and I think that's just led to a broad sell-off across almost all markets. And I find with some of this economic data that does come through that it does have an effect of almost to the point where investors sell first and ask questions later. And last night the markets were probably anticipating a greater fall than what we did have, and I think that shows that maybe on the back of that data, perhaps the reaction was a little bit stronger than it needed to be, and now investors are trying to figure out how bad is the actual situation and have we perhaps overpriced the negativity.
Yeah, in terms of forward price predictions, then, where do you stand on this relationship between gold and recession versus inflation? Obviously, central banks everywhere are so focused on trying to get inflation under control, not least the Fed in the US. But the risk of rising inflation presumably is going to remain very supportive of spot prices moving forwards.
Yeah, I agree with that. I think we've as I said, these shocks to the market create just widespread sell-off. So although we kind of scratch our heads and say, well, in times of uncertainty, in times of high inflation, etc., we would expect gold to be strong. And then you scratch your head thinking, well, why has it been sold off so aggressively? But there is that initial flight to liquidity, and gold, unfortunately, or fortunately, whichever way you want to look at it, is a very liquid asset. So you can trade gold through ETFs, through securities, through the physical as well. So like any security, in times of peril and times of fear, they can get sold. But I do feel that we've seen a little bit of strength coming back to that market. In terms of the view on inflation, absolutely, it is very, very strong. And we've seen a change in global, I guess, interest rate positioning from federal banks to now try and manage that risk. But we still see a very strong correlation between real interest rates and the gold price, and real interest rates, of course, factor in the effects of inflation. So when inflation is travelling as high as it is, although the central banks are trying to lift the rate of the cost of money through interest rates, it's still not quite enough yet to, I think, to stop that inflation effect. So as we know now, I think all eyes are on inflation numbers. We know that especially in Australia, there are going to be multiple rate rises. I think that's no secret. We've come off a very, very low base, fortunately for many investors out there, but we are going to see a number of increases ahead of perhaps a pause to see really what the effect is, and that's going to be critical, because if they're able to curtail inflation with a few immediate rate rises, I think we may see these markets starting to push on. If they have to overdo it, which they often do, and turn the screws a little bit too hard, we may see the inevitable recession, which people are probably fearing as we speak.
Yeah, and as I mentioned at the top as well, plenty of political risk now on the table ahead of the election tomorrow, Saturday. What's your view on that risk, and how are you advising your clients in terms of positioning going forwards into this potentially new tenure?
It is quite difficult to form a view, and this is perhaps a reason why the markets are also behaving how they are. When we look at Australia in particular, election periods are always times of uncertainty. So I think that probably explains some of the behaviour we've had for the first 5 months of this year. And I think a lot of positioning for, let's call it, those more defensive has already taken place. So there's been a widespread sell-off. I know in more speculative sectors and, say, the junior markets, particularly exploration, there's been almost widespread selling for the best part of this year. And that's, again, people perhaps taking a more defensive view on portfolios. We'll see a lot of people sitting on the sideline waiting to see who comes into power over the coming week. Unfortunately, we've had a Liberal government that have, or fortunately, again, however you look, they've had to navigate these waters through COVID times. And as most global banks or governments have adopted that theme of, well, let's just spend our way out of this. And that's created enormous inflation, which we've seen, but it's been a result of printing money. And our government here, the Liberal government in Australia, have certainly adopted that policy of, turning on the print press and spending their way through this call it these pandemic years. So again, I think investors looking forward will probably say, well, what's the stance going to be for Liberal if they retain power? Is the spending going to continue? Because again, that has massive inflationary effects. But conversely, on the flip side, I think if Labor do come in and they really put a halt to things, are they going to tighten the screws? Are they going to increase taxes? Are they going to slow spending? Are they going to often do what they've done, which is perhaps slow things down too far the other way, which again investors may look at as a negative. But personally, I feel that this is going to be a very close result, however it plays out. Sadly, it doesn't look like either of the parties or either of the leaders have got a real majority, and we may see, I think, the rise of the independent candidate through this election. And hopefully, if that is the case, hopefully we get some people that really have some strong policy that they can really push forward. The worst case I think we could see is almost a hung parliament with people kind of sitting on the fence, and you really have the next few years ahead of indecision and an inability of whoever wins to really make any meaningful change. But I guess this is all ahead of us, and probably leads to your question of what happens going forward. And you can understand why investors are probably a little bit hesitant at the moment, and clearly motivated to see what the outcome is on the weekend.
Yeah, I think markets are all over the world in very much a wait and see mode with all this uncertainty, all this risk. But look, thanks so much for that, David. Great to get your take on that as always.
Thanks, Joel.